Hello, my friend. Welcome to the True Secret Sauce series. Today, I'm going to show you a trade on SPX. Whenever an option chain has 45 days expiration, I go and create an iron condor mechanically. Today, there is 45 days to expiration, 7th July weekly. Some people do only monthlies, but I do weekly as well because even weekly liquidity is far higher than many of the stock liquidity. And of course, it has no earnings risk. So I go and I'm going to show you probability OTM. And for those who don't have probability OTM, I'm going to show delta. Basically, iron condor is a put spread and a call spread. So I go at about 20 delta. Basically, when I opened up, it was about 20 delta. It has moved a little bit. So I open up a delta, 20 deltas on both sides. So 2305 and 2450. So it's about 20 delta on both sides. If you notice it, on the call side, there is a $5 wide spread, and on the put side, it is $10 wide. This is a recent phenomena. Previously used to have $5 wide on both sides, but these days I have $10 on one of the sides and $5 on the other side, which I'll show you why. Now once I have it, here is a ballpark estimation. So let me go to the Analyze tab, which I already populated it, and I'm going to collect about $2.15. So my loss on the put side is about $10 or $1,000 minus $200 I collect. Generally, it's a good idea that on any defined risk spreads, your max loss is about 1%, and if your account is too small, have it as 2%. My thought process is either I make 50% of the $2.15, so about I want to sell it at about $1.05 or 10 cents, or close it in 21 days, whichever comes first. Until the 21 days, the only management I do is I look every day to see if any one leg has become 90 OTM or above. So basically 10 delta or above. If that is the case, all I do is I roll it back to another 80 OTM. So roll in, it's not roll out to another expiration, the same expiration. Let's say the stock has moved substantially to, let's say, 2420 or 2425. This side might be tested, but the other untested side would now have a 10 delta or 90 OTM. All I'll do is I'll just roll it back into the 80 OTM. I'll keep doing that till it is about 21 days. This could be consistently done because these days there are a lot of weekly options that keep popping up, and just go every day morning to see if you have any 45 days expiration. If it's a 45 days, just go and create an iron condor at 20 delta. You're free to have both sides 5 point wide, or one side is 10 point wide. Again, the reason why I just did that was if I have 10 point wide, it is close to 0 beta weighted delta. Now if I show you this 2300, notice I become negative 20 delta. To reduce that, I keep one side as 10 delta. I can go further and then make it like 0 delta, but that will really risk me. I mean, if it goes down, my loss is like $1,500, which I don't want to do. So I just really want to have a 0 delta literally and collect money in time decay. I do not know if you're going to make a profit in this trade or a loss. We'll follow through this trade as it goes by till I close it. Now It's little over a week since we put that trade, and I have some updates on them. Let's look at it. The trade was literally put on 5/23. As I was mentioning, we are now in the mother of bull markets, and it is relentless. Option sellers who have sold expecting a reversal are all getting hurt. In our case, it was an iron condor, and so it has both a short and long side and is pretty much neutral. On 23rd we put it, and since then the stock market pretty much is doing an all-time high every single day. So what I did was, a couple of days back, I think it was Thursday, I could not update here, the put side had already become 90 OTM or close to that. So what I did was I rolled the positions to have the put side just to have 80 OTM, and I collected $30 in that process. Recall that the put side was $10 wide and the call side was $5 wide. Now the call side is the one that is getting close to in the money. The original trade was a $10 wide put spread and a $5 wide put spread collecting $2.05, and I have rolled it to collect another $30. So it's about $3.40, 230 plus 205 plus 130, so about $3.35 has already been collected. So now my max loss in this would be only close to $150. That position still has 33 days left. Recall that I said I'll manage at 21 days when I roll or close it. And let me see what is my OTM. So my OTM on the put side, put spread, which is the bullish side, is 73%, and the call side is getting little close to uncomfortable levels, and I might again roll. Let me see how it goes on this trade. But in this trade, if there is a substantial loss, the loss has to come from the put spread and not the call spread, courtesy of the $10 wide put spread versus only $5 wide call spread. I'll see what best we can do to mitigate any possible losses or even have a winner.